So over the last 1 month, Nifty 50 has fallen by more than 5%, while a lot of Nifty 50 stocks have fallen much more than that. So during the time of Diwali, when the entire country has multiple Diwali sales going on, I think this is a good time for us to look into the stock market Diwali sale and pick out those interesting stocks which are coming under our radar. So to set the agenda of the video, first we'll discuss why Nifty has fallen so much and why I personally think the market is very likely to rebound from these levels. And then let's discuss 5 interesting Nifty 50 charts which I think are exciting for me and which you should also be looking into. So if that's the case, what are you waiting for? This is Ajay Ajith. Welcome to Market Feed. So first, let's discuss 2 major reasons why the market could be correcting right now. The first reason is that FIAs are pulling out a lot of money from the Indian markets because of the recent SEBI circular. Yes, the SEBI circular was about F&O trading, but hear me out for a second here. When institutions come into the Indian market to do options trading, they don't do it with liquid cash, right? They come into the market, they buy some assets which they think are good or priced well, and then they pledge those assets and then they start trading in F&O using the collateral available. In fact, we've made detailed videos about how you too can start pledging and trading in the Indian markets. You can go check it out here. In the month of September, which is the previous month, FIAs were net buyers for nearly 12,000 crore rupees. And if you're excluding just the last day, which is 30th September, FIAs were in fact net buyers for nearly 20,000 crore rupees. And the SEBI circular came out on October 1st. So every single day of October has been heavy FIA selling in the Indian market. Overall, if you're looking at the last 20 days, FIAs have sold more than 80,000 crores worth of stocks in the cash market. Yes, so FIAs have been net sellers for every single day of October, and that is definitely not a small thing. And 80,000 crores is not a small number at all. So this SEBI circular might be one of the largest hidden reasons why FIAs are pulling out heavily from the Indian market. And the second reason, the larger second reasons could be plainly that earnings have not been as surprising as people think, right? So starting from big companies like Reliance, the earnings reports were not that interesting that the market supported their long-term story. So along with FIA selling, the earnings not being that great. Again, earnings were not bad, but not being great. These two reasons together have been causing the recent fall. Now let me give you 2 major reasons why I think the market is very likely to rebound from here. So the first one is that while Nifty 50 has fallen more than 5%, Nifty mid cap and Nifty small cap have not fallen that much. So if you're looking at history, whenever the market falls, whenever the benchmark index like Nifty falls by more than 5% or 10%, small cap and mid cap stocks often perform worse. But this time, that is not the case. We are seeing only large selling happening in Nifty 50 stocks based on the crores of money being pulled out, right? And on mid cap and small cap, a similar crash or a similar fall is not happening at all. So this leads me to believe that FIAs are heavily pulling out of just large cap stocks based on few of their assumptions. The larger market, the entire market structure does not indicate bearishness because of this very reason. Now the second reason is that while the Indian markets have corrected more than 5%, the US market along with the European markets, they are comfortably trading at their all-time highs. So largely if you're looking at it, Indian markets is heavily correlated with a lot of international markets. Whenever they move up, India is also very likely to move up. So because of temporary reasons like temporary valuations being stretched, we are seeing a healthy profit booking in the market. And after this, right, after this healthy profit booking, the market is very likely to rebound if the international markets also remain in the same trend. So with these 2 major bullish assumptions in mind, let's go through 5 Nifty 50 stocks which I think you should be adding into your watch list. So let's get ahead into the screen share. So starting with the largest company in India, which is Reliance. If you're looking into Reliance's chart here, you can see that from July of this year, the stock is down by more than 15% and it is currently trading under its 200 days exponential moving average. So if you're looking at the reasons why, the major one was, yes, FIA selling, but the other reason was during the last earnings release that the company reported, the O2C business, that is a oil to chemicals business, which is a large part of the company, they reported reduced margins. So because of the earnings report not being that great, the market has punished them and the stock is now currently trading at levels it was trading in the beginning of the year. But I think with the upcoming bonus issue that is happening on 28th October, a lot of investor interest could come back into the stock. And with these levels, I'm also very excited for the stock. Right, so the stock is currently trading at 2,742. But if this level is broken on the upper side, again you can see that this is a day chart, and this 2765 level is a really good one for Reliance. I think if this level is broken, it could be an indication that the stock still has some strength. And with a stop loss of around 2,640, that is a trade that I'll be probably entering into. Again, I'm not a SEBI-registered advisor. This is not trading or investment advice. These are just my views on how I think the Reliance stock could perform in the future. Now, the second large cap stock is TCS. The stock has fallen by more than 11% as of today and is currently trading near the 200 days EMA. And if you're looking at these levels, there are some really good supports around this zone as well. So we can see that this zone, which is 4,056, is interesting, and just below, right, 3,973 could also be a very important support for the stock. So it is currently trading it near its 200 days EMA, and I think this is a good pick or a decent pick which you should be adding into your watch list. So the third stock here is Kotak Mahindra Bank. While the stock has fallen by over 8% over the last 1 month, I think it's still an interesting pick because of the recent earnings report. The stock has cracked today, right? Today it has cracked more than 4.4%. Intraday it was down by much more than that. I think it was down by more than 7%, but now it has recovered and is now trading near the 200 days EMA. So despite FIAs holding more than 31% in Kotak Mahindra Bank, the fact that the stock has not fallen by much is also a good indication of its strength. And in the daily time frame, it has only fallen because of its earnings report, which mostly it has recovered today itself. And any indication of the stock closing above its 200 days EMA is really good for it. And with the current support nearly at 1,730, I think it's a small risk to reward, which I can probably afford, right? You should also be doing your research before getting into any stocks that we are discussing here. Now here we have discussed three major stocks. Which are they? Reliance, TCS as well as Kotak Mahindra Bank. Let's go ahead and discuss two Tata stocks. Already we have discussed TCS, but let's go ahead and discuss two more Tata stocks which I think are at interesting levels. So the fourth stock here is Tata Motors. The stock has cracked by more than 24%. If you had invested 1 lakh rupees into the stock, you would be down by more than 24,000 rupees as of today, right? That is how much the stock has fallen. But I think the current level it is trading at is very, very interesting for the stock. So this support level of 888, which was also a previous all-time high, I think it is very interesting for the stock. So even though the stock is currently trading below its 200 days EMA, I think with the Diwali season, we should be seeing a lot of festive sales for these automakers. And out of the bunch, Tata Motors has the lowest PE ratio. Currently, it is trading at a PE ratio of around 8 or lower, right? So I think it's a very interesting stock that you should be adding into your radar. And if you have watched our Tata Motors analysis here, one major thing that I talked about there was Tata Motors should definitely rethink their Jaguar strategy. And for that, they've replied really well. And currently, Jaguar has stopped all production and they're focusing majorly on Land Rover as well as Tata Motors India. If you are someone who likes lesser risk, I would suggest that you add the stock to your watch list after it crosses back the 200 EMA, right? After it crosses back 200 EMA and shows strength, I think it could be a good opportunity for you to add it to your watch list. And now the last stock here is Titan, another FIA favorite stock. So if you're looking at the levels here, the stock has fallen by 13%. Remember, Nifty has fallen only 5%, but all these stocks have fallen much more than that. So Titan has fallen by nearly 13%. And if you're looking at a weekly view, I think it's nearing a very good support level. So you can see that multiple times Titan has come to this 3,200 level. It has corrected and then moved back up. So these levels I think are very interesting for the stock, and you should be definitely adding Titan to your watch list as well. Again, it is a festive season which is coming up, and stocks like Titan, which are into the jewelry business, traditionally they tend to perform really well in these times. But even if they do not, I think the risk to reward is decent enough that you can think about entering into the stock with a small stop loss, right? That's how all of these stock picks have been designed. Now, I know there is no reason for the market to move back up from here right after we put this video, but I believe the these 5 stocks which we discussed right now are really fundamentally good stocks, are blue chip companies that you should be definitely having an eye out because they have fallen so much over the last 1 month. The last time we did such a video, we had discussed 3 stocks, Dr. Reddy, Bajaj Finserv as well as PNB, and from that the first 2 stocks gave really good returns and PNB did not give an entry. An entry was supposed to be taken only if 140 was crossed. I'll put that video also here in the I button. So let me know any of your comments and thoughts in the description down below. As always, if you have any doubts, I'll be there in the comment section to help you out and become a better trader. So this is Ajay Ajith signing out. See you all again in another video. Bye bye.